All right, everybody, welcome to the stream. Sorry, I was a bit late. I thought I was live. Apparently, I'm not. So let's do this. So the London session gave us two setups, and the setups were from Euro GBP. Well, the Euro GBP gave us a setup in the Asian session, and it gave us a 1.5 return. Then we had the London session give us a US 30 trade, but outside of our timing window. We got the entry outside of our timing window, and there's a lot of things involved when it comes to looking at why we should take a trade outside of the timing window. So I'm not really going to jeopardize. Oh my god, to put my strategy at risk because of one or two trades that happened in the extreme. So we stayed on course and we did not take this setup. Although the strategy seems to be correct, we are moving in the right direction. Yeah. Also, I've decided to make this live stream more valuable. We do something productive. This means that we will have more time on speaker and expect a lot of noise, expect a lot of interruptions here and there, because that is my normal life when I'm trading. There are kids where I am right now. The office is not that insulated, so don't let that background noise be the deterrent of progress. Very soon, we are going to make the progress that we want. We will have the things that we want and the conveniences that we have. But for now, let's spend the only free resource that we have, which is time, to do something productive. All right. So what we will do is I will be building a strategy. So I'll be building a strategy from the first bounce strategy. So I can't tell you how I know anything about the first bounce strategy. I've watched a couple of videos from Stacy Buck, but I've not really focused my energy and attention into learning it. So in this live stream, and from this live stream moving forward, we will look at the first bounce strategy from Stacy Buck, and we will follow a system, a process where we learn the strategy to where we can apply it. So welcome to the stream. Let's do this. So first things first, of course, we also have to trade. So every time, every couple of candles when they close, we shall also be looking at the candles, both in our strategy, because we have to trade, we have to make money. So this is just something to uh, spend time when we are waiting for setups. So step one is obviously look for those pairs that have the potential or that are at the high of the day, high of the week. So this one already gave us a setup. I don't think it will be giving us any other setup soon. All right. So the first step to learning a new strategy obviously is finding more about the strategy from people who actually trade that strategy. So I have a list of about 4 people or 4 channels that cover the strategy very well. I don't know if it's well or not because I've not watched the videos. We are going to watch the videos together here and I'll make some notes for myself. So there is Stacy Buck, Pips to Profit, and Trading with No Indicator. I think we'll start with Trading with No Indicator. The channel seems more interesting and I've not watched any of their content. And this is how my YouTube looks like, by the way. I don't see any thumbnails of videos because obviously you get sucked into scrolling, and yeah, so it's just like looking at a newspaper or whatever you want to call it. Anyway, we search here fast bounce trade. So we are starting with the fast bounce trade, trading with no indicator. All right.
What's up?
Hi, Jira. We brought you here today to let you know that we made the business decision to switch to ClickUp.
All right, let's do this.
Welcome back, everybody. Today I want to clarify the first bounce trade.
So before we continue, please confirm that the sound is good. All right, thank you.
And I hope after this video presentation, it will be more clear as to what the first bounce trade is and how you can actually trade it in lifetime in the charts. I know from the video that was done before, there were some questions. So I'm also hoping that this video will assist with clarification of the concepts, right? So let's start. So what is the first bounce trade? It is basically the follow through after an explosive news catalyst event. Stacy Burke would say that you're basically to wait for the first 15 minutes after the news for that candle to close before you start looking for the first bounce trade. And in my backtesting, I found that to be quite accurate. So you want to, when you have a first bounce trade set up, you want to be sure that, again, the news event is explosive. It's not teetering around or hanging around, or you're having a full blow through of price during and even after the event. You want to also have a setup in mind. So most times the news event will coincide with a setup that would have been setting up from before the news itself, and the news would have been a catalyst to continue that move. So that would add to it being a good trade setup and something to actually look to trade. Another thing would be to, I know some persons in terms of interpretation of this strategy, they trade the first bar, which is the first bar that comes after the close of the news candle. I found that that is not necessarily how price tends to play out. I think majority of the times, I think the way I'm going to show it to you will actually play out more often than a first bar trade. So we're going to look at the 50-minute chart. And of course, in taking the entry, we expect that we're going to take it on a lower time frame, a 5-minute or a 1-minute time frame. But I believe after explaining this, there will be a better understanding of how to go about taking this trade. So what I'm going to do, I'm going to go to the chart and just explain the examples from there. Let me see here. All right, so what I did was I went back all the way to the 1st of August. I wanted to show you quite a few examples just to nail it home as to how to go about taking the first bounce trade and to erase any doubts or any misunderstandings that there might have been. All right, so let me go back. This is the 1st of August. Just blow this up a bit. If I can find my tools, I've shifted. Here we go. Right. So we have this news event which occurred at 9:10 a.m. on the 1st of August. It's quite obvious this is a news event based on the size of the candle and even the size of the wick of that candle. So the news event has happened, the candle has closed. What we're looking for next is a continuation of that move for coming out of the direction that the move from the news has happened. And so we have price continuing to fall. This was a very big bearish candle, long rejection wick. Price continues in that direction after the news. But what we're looking for is the first pullback after the news. And so we would have seen that first pullback happen here, which is what this arrow denotes. This arrow denotes the news candle. And after this pullback, we're going to look for another candle after this to show us some confirmation that price is actually failing to go in the opposite direction from the direction that the news had gone in. And so we have this doji here, and then we had this engulfment. I don't think there was much follow through on this news event for us to would have gotten say at least 50 pips from this trade. The most that probably would have been gotten is about 20 or less than 20 pips. Still, there would have been some trade. A trade from here to here is about 25 pips. Still something to. But the idea is you're going to look for that news candle to close. 50 minutes after that, you're looking for either the pullback or price is going to continue as you see it here. You're going to get that first bounce, which is this candle, and then you're looking for the entry on the candle afterwards. So let's go to the next one and see how that plays out. All right, so the news event was this bearish candle at 8:30, I believe, yes.
Introducing XM Copy Trading. Copy successful traders and earn from the market.
So we had the pullback, which is the first bounce here. And then we had a candle that engulfed the body of this doji. Any entry after this is good. Yes, price went back up to the 50 round number level. You really would not have known that. So entering even after the engulfment, probably at the open of this candle, would have been a good entry if you were patient enough to wait for price to continue to show its hand and gotten this entry. This would have been the best entry on this day. Would have gotten over 100 pips on that trade. This day would have been a little bit tricky, if not a lot tricky. We had two news events on this day. I think we had a 9 o'clock and a 8:30, and then a 9 o'clock news event. But if we look at it as it is, we have price going up during the news event. we would have been looking for that first bounce, which is the first pullback after the news event, and would have gotten that here. But then after that, because we would have had to wait for this candle to close, then after that, we would have gotten another news event, which would have kind of negated this news event in terms of looking for an entry. We had a continuation in the same direction, but yes, price pulled back again, but then price continued all the way back up here. This would not have been a best trade setup in my mind. This is choppy price action. So the fact that you did not get a clear setup such as this, where you had the news, the bounce, the engulfment, or if you had an inside bar here, the next bar would have been the trade. I'm sure there are examples coming up of the inside bar. So let me show you that. All right, so we had this news event at, what time was this? 8:30. We had the pullback, which is the first bounce. And then this candle was engulfed here. So you're looking for an entry at the lowest point or at the nearest round number that would have given you the best entry on a lower time frame. You'd look for your lower time frame confirmations instead of this candle, and that would have been the trade for at least 50 pips. So the news candle, the first bounce, the engulfment is a clear sign of price continuing up, and the next candle would have been the entry. There was no news on that day. And then here, so the next news day was on the 10th. This was the news candle, a really large doji candle. There was no clear direction, obviously, with this candle. So I've had to wait either for, I think this was a 9:30 open, New York open. Well, this was 9 o'clock. New York open engulfed this entire structure here. Clear sign of downward movement. And this pullback here would have been a great entry after this news event. Another thing that you can use a confluence to is remembering the levels of rise or fall before the session that we're trading in. So in this case, would have had 1, 2, 3 levels of rise already heading into New York. So basically, we're looking for a pump and a dump setup in this case. And that's exactly what played out. As I had said, the news can be a catalyst for the best trade setup that you have in mind, or based on whatever LD you would have gotten the day before, etc., or whatever day there is in the cycle. That those can be used as confluence to know what direction to take the trade in after the news too. Because there are going to be times when the news will go in one direction and then price will reverse and go in the other direction. So something like this would have assisted with coming up with a thesis as to which direction to take the trade in after this news event. We had this news event on at 8:30, clear pin bar engulfment at 0, level. And then we had this bounce. There could have been a trade in here even on a lower time frame. So we had the bounce. We had this bar. We didn't engulf the candle that retested this level. And any one of these could have been an entry based on what confirmations are given on the lower time frame, and probably at least 30 to maybe 40 pips out of this trade. All right, so here's another news event that may be tricky based on all the weeks that are coming out of the news, either coming or after the news. So we have this 8:30 news event. And so price obviously went down, came back up, closed as a very long rejection wick, and we had this retest. This could have been an inducement, but again, looking at what happened before the session, the high of the day was here, so we had 1, 2, 3 levels of drop had a 50 pip stop hunt in this week here, and then price went right back up. In my mind, this would have been an indication of bullish movement, but of course we always need confirmation. So I'd wait to see what the New York Open would have brought, or if it's not in the second hour, what the third hour would have brought in terms of confirmation for the trade to continue. All right, let's see if we find another example. We have this news event, I think it's 8:30. So we have bearish movement. We had this pullback, which was a doji. What would have negated this trade? The doji, even though it's a pullback, would have been looking for either another bearish candle or a bearish candle coming after this doji to show our price is going to continue in the direction of the news event, or an inside bar, which would show that a retest to this high is not holding. But with the next candle,
Beautiful, beautiful, beautiful. So as we are learning more about the first bounce strategy, let's look at our own strategy and see what the market open has done. So so far we have nothing for us really. All right, let's continue with learning.
candle going this way, that would have negated the trade after this. So remember, we're looking for the news bar, we're looking for the pullback, we're looking for the next candle to confirm the trade in terms of it being an engulfment or an inside bar, and then we would know if the trade is valid after that. With this candle would have negated the trade idea of continuing to go short until we would have gotten this engulfment here, even here that engulfs this entire structure, engulfs the news candle. The next opportunity for the trade would have been here at the 50 level, I believe it is, yes. This is one of those tricky days again, where we had 9:45 news event, bearish movement, and again, if I'm realizing in hindsight, having not said it before, another thing to look forward to, as I said before, to help with confluence for the trade is to look for the levels of rise. We had 3 levels of 50 going up. That would have been very good confidence to look out for the pump and the dump on this day. Bearish continuing bearish after the news. We had a pullback. We basically had an inside bar here. My thesis after this would be looking for an entry at the open of this candle here, and for the continuation of the move down. Would have gotten consolidation for another 45 minutes or so. But even so, I think most of that trade would have happened outside of the 12 candle window, this time period. But the trade would have been confirmed inside of the window. So still a good trade.
Hey, Grant Cardone here. It took me 4 decades to figure out how to get wealthy, but I'm going to teach you how I did it in just 2 hours. Even if you
All right, here was another news event at 8:30. So we're with the news event going bearish, we're looking for the pullback and the continuation. In this case, what would have negated the trade as a continuation would have been, yes, we got the pullback. Yes, we kind of got an inside bar, but then after that, we would have could have probably taken the trade actually. So it would not have been the better trade of based on the fact that price would have gone in the other direction about another 100 pips after that. But still, if we're looking for 25 to 50 pips after the news, then this could have been a trade, the retest of the open and the continuation down. News event taking us to the 0-0 level. And then after that, we had this huge engulfment candle, which would have negated us even thinking of continuing in the upward direction. The entry after this engulfment, in my mind, would have been fine, and we would have gotten at least 50 pips out of that. I hope you're seeing the picture, and I hope it's becoming more clear as to what can assist you with trading after the news. Just using the simple confirmation of waiting for the news candle to close, waiting for the next 15-minute candle to close, which would either be the retest, which is the first bounce, or it can be a continuation candle in the same direction, but you're still waiting for that first bounce. So that is the candle that is a pullback. You're waiting for either an inside bar or an engulfment in the direction of the news, and then you can take the trade on the next candle. So if no engulfment, no inside bar, and price is closing above the retest candle, then you would still have to wait to see what kind of hand price is playing out at that particular time to confirm the trade. But that's the basic idea. We had this news candle, we had a continuation, we had the first bounce, we had an inside bar. Next candle at the lowest point is a trade for at least 50 pips there. And we had this huge candle, which is good to show that there's a lot of momentum. And we had the first bounce, and we had basically a very huge candle that basically engulfed the candle that retested after the news. If you're looking for the best fill would have been at this 50 line. If not, following the rules that I've made up, I would be looking for an entry. I'd have actually been looking for an entry up here, but if I missed that, and waited, and it got to the 50, I would have taken the trade there. That's another 50 pips of that news event. We had this news event. This video is getting long, but I really want to drive home the point of what to look for after the news. And I hope this is quite clear after this. The news event, we had a huge week afterwards. We're still looking to see if we're going to get that first bounce trade. In this case, we get a retest, but then we continue to get consecutive bearish candles, which eventually close below the news candle. I would be looking for my trade after that. At least 50 to 75 to 100 pips would have been on the cards to take after that event. And again, we have 1, 2, 3 levels of rise into the high of the previous week. That would have been the confirmation or the added confidence to take the trade for a short. And we're up to the current day. I hope this clarifies what the first bounce trade is about. It's basically a low-hanging fruit. It's a continuation trade.
All right. So that was the explanation of the first bounce trade from our first channel, which is trading with no indicator. So credits to the owner of trading with no indicator. Thank you a lot for your insights. Now we'll move on to the next guy, who is pips to profit. See what he has to say about. All right. Oh, yeah, new day trading first bounce. Yes.
The best trade setups that you can take are the ones that are simple, barely any rules, they're easy to understand, they're replicatable, and you can execute them without question because, most importantly, they work. I'm jumping right into this video, but before I do, ladies and gentlemen, do me a huge favor, hit that like button. If you're not subscribed already, consider subscribing and enjoy the video. Before I get started, this whole entire slideshow is down in the description below. If you want to follow along, go print it off, do whatever you'd like with it. The information is down in the description. So let's look at some of the rules. This whole entire thing is based off of trading around the news. New York session, pretty much every single day of the week, there will be at least one news announcement, either at 8:30, 9:45, 10, and whatnot. Those schedules, I always look on Forex Factory for the news releases for major red news, MRN, and I only care about the red news. And you can find that on Forex Factory. I don't really trust TradingView because a lot of times they leave things out and get caught. So some of the rules of trading around the news. I am never going to be in the market when the news hits, number one. Number two, depending on the news schedule, if there's news around 8:30, I will wait till after the news and then I will execute. If there's news at 10 and 8:30, generally I'm going to stay out of the market altogether and just wait until after 10. If there's news at just 10 o'clock, maybe I'll take a trade in the first hour or, that 9 o'clock area. But typically I'm going to wait until after the news so that way I can execute with confidence, knowing that the whole market wasn't built up for that news release and I don't get caught in some kind of weird ranging market. All of my news trades are going to be based off of a larger trading setup. Some of these larger trading setups are going to include first red day, first green day, inside days, where you have a false break of that inside bar and a reversal, or they break out, pull back, and continue after an inside day, and that would be a trend trade. We have 3 days of previous days high or low, and generally those are going to present as a short squeeze or a parabolic trend style of trade. Day 2 trends, day 3 trends, and day 3 reversals. These day 3s, day 2s, I am referring to the 3-day cycle. As I said, I look to only get in after the news. That being said, let's say, for example, 8:30 is the news. Generally, if the pattern has already presented prior to 8:30, and then 8:30 happens and the news hits, and that bar, that first bar on the 1 minute chart completes the pattern, I will look for two types of trades, either a first bar entry, or I will look for 15 minutes after the news, first engulfment, first bounce style of trade. And now I'm going to show you how and the rules based off of those two types of trades. The first bounce can occur between 5 and 15 minutes after the news. It's a momentum style of trade, and the trade should not mess around. Once the engulfment happens and you enter the market, there should be no more pullback. There should be no more pinning or doing anything weird. It should just go at that point. If there is any sort of market gains, I will simply close the trade and reassess because maybe I've missed something, or maybe the market is just not doing what I believed it to do. So I'm just going to close the trade, preferably either at break even, maybe minus a few pips, or maybe slightly in profit. But regardless, I'm out. A first bar entry is a trade where after there's a first bar, the 8:30 1-minute candle opens, explodes, and then I will put a buy stop above that candle for the market to cruise through and get me into the market. Similar to the first bounce, this is a momentum style of trade. There should be no pullback and simply accelerate in the direction of the trade. An exception to that is when the second bar explodes and creates a range, and then maybe there's a couple of candles within that one candle. That's perfectly fine and acceptable. What I don't want to see is an engulfment of that candle, and I'm going to show you examples here soon. Again, if that does not happen, I will close and I will reassess. I'm going to start off with these super fancy pre-K kindergarten style of pictures here, and I'm going to make them relevant with actual charts. These or this is what I don't want to see. I don't want to see a consolidation within these large levels, and then on the news release, the explosion to just go back.
Assalamu alaikum, live from Gaza. Want to acknowledge and thank
To one end of the range or the other. If anything, I want to see an explosion and then there's room to go up to one of these levels because that gives me room for the trade to continue. Whereas in this example, we have levels down low, levels up high. We have consolidation, all the price action within the day. And then notice how the news candle on the 1 minute explodes and only goes back to that level. I either want it to go maybe halfway or a quarter of the way, whatever it may be, so that I have room to go, or I want it to explode all the way through, letting me know, hey, maybe this is a range expansion of that level. And these important levels could be high of the current month, week, day, or previous levels such as previous month's high, week's high, or day's high. This is another example of a no-go for me because this is meant to be a momentum style of trade, and this is not a momentum style of candle. This is a massive doji candle where we're trading in between a range. Maybe they pin through the high of the range, through the low of the range, and then we close right back in the middle. Now, a further thesis can come after this candle, but typically I am no longer looking to enter this market after I receive a news candle such as this. Now let's make an attempt to take my super sophisticated drawings. We'll go back just a week or maybe 2 weeks and find the most recent news candles. This chart is gold, and we're going to make those drawings relevant. Here is an example. This dotted line right here is the previous day's high. We have a consolidated range right here. Notice that this is the news candle. They've exploded out of the day's consolidation, but then they've done a 1, 2, 3 up to a level. They pinned through it, totally fine. So if you do a first bar entry based off of what I've just said, you put your buy stop above, they've shot up and gone through a level, perfectly fine. At this point, you're still in the market. At this point, you're still in the market, and you get an engulfment. Okay, this is exactly what I don't want to see. I don't want to see momentum fade and then an engulfment. The moment I get an engulfment, I'm out. I'm done. If I haven't already taken, I think this was almost 30 or 40 pips on this one candle alone. I would have probably considered closing based off of what I said about the range. But if I haven't closed at that point, I'm definitely getting out at this point. They should not have engulfed. There should be no pullback. It should just go. News at this point explodes up to a level, but not through it. Red line stop in case of first bar entry. So this is my buy stop at the close of this candle. I'm looking for the market to explode. And the engulfment, as I just said. That last example was an example of a first bar entry, but that was an example of a first bar entry that you don't want to see. This is an example of a first bar entry that has played out fine, but maybe you would have been nervous because you just don't quite understand what you're looking for. This red line is my buy stop. I put it above the high, the close of this candle. I don't put it there until the candle is maybe 1 or 2 seconds about to close. And then once it is about to close, I'll put it. The next candle opens and launches higher. I want to point out some things. Notice this 2-bar pullback. I know I said that you don't want to see any fiddling about. That is true. But it will not always just go in a straight line. There will be an explosion, and then sometimes you'll get a little slight pullback or something like this. But what I don't want to see after my entry is an engulfment of this candle. If they close below this candle, I am out. I don't care if my stop was all the way down here. I don't care if my stop was all the way down here. Once this candle closes below this candle, I'm done. I'm out, and I will reassess. And because they have gone up, they have said this is a fake out, breakout candle, and maybe they're coming back down. And I don't want to take a full stop. I'll just close it as fast as possible. In this instance, though, you would have been safe with a 14 pip stop, and you would have had a good solid 50 pip target, or if you wanted to hold on for longer. I even gave an example of where I would be considering on adding into pyramid into this position, in which case I would have had one position open here, a smaller position open here, so that my average could have been in this area somewhere, and I would have still been technically at break even. Something else that I want to point out about this first bar entry is notice that we have a prior setup already forming. We have a parabolic short squeeze where we have a break-in structure to the upside. You can't see it to the left, but there was a larger 15-minute break-in structure over here. We've split this range, and we've jammed back down in 3 pushes, and then started our little channel here and exploded vertically off of the news. So this has already become a larger trading setup, and we have lots of distance to go before we get to the next level. That's why I prefer to see these where there is no level been broken. We just have a breakout of a large consolidation, which means there's range expansion opportunities of this day. Continuing the first bar entry discussion, I've blown this up a little bit. This is not the same example, but it's the same exact concept. Notice the previous day's high is right here. We have a break-in structure to the left. This is the low. This is the high. Everything on the middle is nonsense. They break the high, and then they jam back down into the low of the day. This is 3 hits to the low of the current day, as well as we have broken out of the previous day's high on a Monday, which means we are at the low of the current week, and all of this volume has the potential for being trapped at the low of the current week. Please rewind this a couple of seconds and listen to what I just said one more time, because that's very important. This consolidation is the parabolic trending pattern. This is the manipulation of that channel, which has now created a larger channel and then gone vertical on the news. So this overall has presented as a large scale parabolic short squeeze, as well as trend trade. This could all become volume trapped at low of the current week. Beautiful. That's great. That doesn't help you get in after the news, though. With the understanding, though, of the first bar entry and the 15 minutes after the news, you have to decide which one is going to take place. So first bar creates the range, and I put my buy stop above that candle just in case it explodes through. And that does. That's exactly what happens. We get about a 14 pip stop once again, and we go up 1 candle, 2 candle, 3 candles, and in 3 minutes you have over 50 pips, and you're out, you're done. You've got almost a 1 to 4 risk to reward. You can go about your day in 3 minutes and be done. Common misconception about the 15 minutes after the news first bounce style of trade is that it has to come exactly 15 minutes after the news. And that is simply not true. I'm going to show you how to think. Use your brain and just use a little bit of thinking power and try and figure out, using my entry criteria, how you can make this relevant. So in this case, you have a low and you have a high. The reason you have a high is because we have a high, a low, and then a higher high. So at the break of this high, this becomes the low, and that becomes the high. That's just a review of my market structure class that I've taught numerous times in the past. But so at this point, all of this stuff is in the middle. It's a consolidation. There is nothing relevant about all of these little itty bitty swings. What becomes relevant is after 8:30. This is 8:30 news candle right here. It jumps down and breaks structure to the downside, which tells me, based off of my entry criteria, I need to either look for a first bar entry based off of the news, or I need to look for 3 pushes back up, because that's what my entry criteria says. I get a break in the structure. I need 3 pushes back up. In this case, it jumps down and there is no first bar entry. They do not break below, but we do have 3 pushes back up. The first push, the second, and the third. This is also a 1 sideways, 2, and 3. Now, let's talk about timing. This engulfment is 13 minutes after the news. Not quite 15 minutes. It could have been at 14 minutes after the news. To be honest, it could be directly at 15 minutes. But the point I'm trying to get across is just that it does not have to be exactly 15 minutes. So on the engulfment, you get in the market. I put in my stop just above the last candle, and I wait. They come down a few candles. I'm in profit. Notice the candle right here. They jam down into the low, and it does not follow through. There is no engulfment back up. They have just once again stayed inside of this candle's range, waited 3 candles, and then continued the move. Nothing to worry about. If they would have engulfed that candle, I would have been out of the market, maybe at a small loss, maybe at break even. But regardless, I am pretty safe. Get down to 50 pips. You close the trade. You're done with for the day, and you can go ride your bike or do whatever the heck you feel like. Although one of my shorter videos, this is by far some of the best information I have put on this channel yet. This trading setup alone, if you have an understanding of the rest of the strategy and only look for these news trades, could make you a profitable trader. If you took every news trade, or if you just knew what to look for on each news trade, you could be over and done with your trading day within 5 to 10 minutes every single day, because you know that there's news tomorrow at 8:30. I'm going to show up at 8:15 and look for the criteria. Ladies and gentlemen, I hope this video has been useful to you. If it has, leave me a like, consider subscribing to the channel, maybe even share the video with a friend, and you'll have a wonderful day.
Wow, that made it very easy. We are looking for the same patterns. What not every, but what the 3 big channels. I'm calling them big because this is just a sub niche in forex trading that talks about the first bounce, and they all seem to be talking about the same thing. So let's look at what the market is saying before we get back to Stacy Buck, the goat, and see what he himself is saying about it, and then we combine everything, make a presentation for ourselves. All right. So if we look at our charts, wow, what do we have? Oh, well, I see. So we are done with you. Continue. All right. Well, it's closing bearish. Nothing for us there. Nothing for us. So nothing for us really. We'll see how the next hour plays out. For now, let's go back and check out Stacy Buck and what he says about the first bounce strategy. So we are looking at the most recent.
Trade moves or guest directions. We had news catalyst potential on the calendar. 8:30 a.m. New York was the CPI release. Yesterday was Monday, our day one. We already reviewed this yesterday. We talked about last week coming out of Wednesday's peak formation reversal. And that formed day one on the way back up. So again, whenever we have a daily high taken out after a peak formation low, we talked about the break in structure on Wednesday and then the reversal in the US session on day 3 down at the low of the week, which began our move back. And so Thursday was our day one longs. So I had a trader mention yesterday, does it even matter on Monday high of the week? And it matters to me. It matters to me in my process and in my approach to the markets. We had day one longs in on Thursday, and we had day 2 longs in on Friday. So we had higher lows, higher highs, and higher lows. And then on Monday, we continued that triggering of longs into the market. So we had day 3 longs into the market and then a reversal that held above the peak formation lows of the US session until Tuesday's Asian session, where they took out the lows of London. Down in level 1 again, you'll notice they came and went sideways down in level 1 before reversing and coming back up through the high of the day in our Europe-London window. Now we had news on the calendar, but more importantly, we have day 2. After 3 levels of rise, we have a peak formation above Friday's high. I have no idea where the news is going. I have no idea what's going to happen, but as you've heard me say over and over and over again, I do not trade the news. I don't try to worry about where it's going to go. I'm not even concerned about it. But what I do want to know is where's my high and my low? There's my high and my low of the week. We have a high and a low. We have peak formations. We have a break in structure on the inside now. And then we have 3 levels of rise. So for the traders, again, who have told me that levels of rise and fall are irrelevant, that's fine. It's irrelevant to you. It's relevant to me. We have 3 levels of rise heading into the news. I have no idea what the news is going to do, but we get an explosive breakout. Now, coming back to knowing where the previous week's levels are, when this market breaks out strongly, I will tell you with absolute certainty, when we come off the high of the day, the high of the week inside of the peak formation, I will never counter trend this move. Now, looking back, we have the low of the month down underneath of September 6th. Sorry, so we'll go September 1st. We have lows down at September 6th and September 1st. We have higher intraday lows in that lower 100 pip box. I have no idea where this market could continue. It could continue to fall. I've seen gold, oil, S&P, NASDAQ. This thing could go another 250 pips. I have no idea. But knowing that we have this strong breakout, the first thing that I'm going to look for, as I've mentioned in several videos, is the first bounce. For 15 minutes, I'll let that market trade, but I will watch for a follow-through opportunity, either coming off major round numbers, or as we see after the first 15 minutes, 3 pushes and a 1, 2, 3. The next 15-minute bar opens with an engulfment, taking out the 1, 2, 3. Now, again, I have no idea what this market's going to do, but it's a 1-bar stop, positioning myself into the market that 1 bar. My thesis is that this momentum is going to carry through and take out the low-hanging fruit of all the higher lows from the previous week, but also knowing that as we get towards the end of that hour, that this market may proceed for a 15-minute cycle at the beginning of the hour to trigger breakout traders on the hourly charts. When they trigger that hourly low, that breaks hourly traders into the market. So we now get the next hour of traders into the market. When they break this low, the hourly low is just underneath. I'll bring this up. That little consolidation right in here. So we have hourly traders in the market now. We could end up going down for 3 hours, 1 hour, 2 hours, 3 hours. But my thesis is this. I'm in the trade with the follow-through momentum with a news catalyst. But as we get lower down into this level 1 area, I'm happy to take the money off. That's an 85 pip run straight down at the beginning of that new hour. Now, this could, as it did, proceed for 15 minutes, false move beginning of the hour, triggering in hourly traders. We might have a 3-hour trade. I have no idea, but that's a no stress follow through trade. First bounce after the news. So traders trade the news. There may have been traders who said this is going down, I'm going to sell high. There may be traders who are trying to counter trend this, thinking that this is an uptrend on the 15-minute to go long. I have no thoughts whatsoever regarding that. I am only looking for a first bounce opportunity. If it went vertical through the high and gave us 3 pushes, I would look for a potential reversal opportunity in that second hour. We have the New York Open still coming up in a couple of minutes. This market can continue down for another hour and maybe 2 hours, or again trigger hourly lows. New York might open up and push up into existing short trade. No idea, don't care, done for the day. That's a no stress first bounce follow through after the news catalyst. So understanding where is the low hanging fruit for that market to continue to have fuel, to continue to run down. We had our 3 levels of rise, a peak formation on Monday. The market sold off on the news at the high of the week inside the peak formation at double zeros. My trade was merely just the first bounce follow through for that continuation news. Keep it simple, execute your setups, manage your risk, take profits. Go with you.
Beautiful, beautiful. All right. So we've watched 3 videos looking at the first bounce setup, and from my notes here, there's a common theme. So number 1 is we trade after the news. So after news, and then we are looking for a bigger setup. So bigger setup in play. And then we are looking at the level So, do we have room for low for low hanging fruit? Then usually first 15, so late news candle on 15 minutes. So those are first the requirements, and then we look for the first bounce opportunity, which is just a retest for the continuation. Now we'll look about at that later. For now, we just have to stick to, after the news, a bigger setup in play. Then we have to understand we need to take the trades off of the levels. So if the trade is coming off of the high of the day, or that news candle has moved 3 levels, or yeah, so basically that's all we need. And then we let the 15-minute candle close, and then we can even apply our own entry criteria if this setup aligns with what we have right now. So yeah, it's not that hard. And for the rest of the live streams, today, tomorrow, this week, next week, we will actually be backtesting this strategy to see if we can get the results that this setup claims to have. Then see how that goes. For now, I think this is the only pair that looks like it's going to give us a setup in the next 15 minutes. So let's wait for that close. For now, I think I need more time to actually process this information in my mind, think about it, and come up with a plan of how I'm going to tackle this backtesting process. So with that in mind, I will be, for the rest of the session, I will just wait for my setup and think. Yeah. So anyway, thank you for watching, and I will leave the stream there so that I do my own thing, focus on my trade, on the trading and on my private community. But I will see you tomorrow, the Asian session. Have a beautiful day, and may the markets be with you. Bye bye.